Is the Austin and Travis County real estate market cooling off or just catching its breath? Stick around today because I have the stats comparing last month and last year so you can see what's going on. I'm going to tell you the summary and tell you what I think is the most important thing to do in the real estate market right now. Hey, I'm Nicole Cooper, and I've been helping people buy and sell real estate in the Central Texas area for over a decade. So if you want to know all things real estate, you're in the right spot. Let's get started on these stats so we can see how the market is doing compared to last year. All right, so we're just going to start here in our overview. This is Travis County single family homes. The median sale price is $555,000. And as we zoom in here on this graph, this shows us month by month where we are now and where we have come from. This green line here is 2023, the orange line is last year, and this black line is where we currently are. So we were neck and neck with last year at the beginning, then we came up above where we were last year, then we came back down closer to the last 2 years on average, and then in April we came down significantly below the prior year. Now in May, as we just completed the month of May, we are tied with 2023. So 2024 had a better spring than we're having this year. And let me tell you, all of our listings can feel how sluggish it is out there. It feels like if there's any single thing wrong with the property, the buyers are just hands off, not for me, I'll wait for perfect. And if you've been in the real estate market a little while, you might know that perfect doesn't exist. So it's been a real struggle for the sellers where we would normally consider a big pop in the market like last year. We're not feeling it this spring. And here is why. Well, at least it's one reason why. So if we look at the interest rates here, this is the end of February starting here. So we dipped down a little bit towards the beginning of March, hence that little push up, and then we've just gone up since then. We had this top line, by the way, is the 30-year mortgage rate, and the bottom green line is the 15-year rate. So we've been steadily over 6.5% all year, and then look what happens here towards the middle of April. On April 17th, we come almost up to towards 7%. And we've been hovering there ever since. Today, it's showing at 6.89%. And generally speaking, if this is showing 6.89% here, if you have perfect credit, you're probably going to be closer to 6.75, 6.5% when this shows 6.89. But nonetheless, these are very high rates compared to where we've been. Compared to the history, not at all. But compared to where we have been recently, they're quite high. Historical rates average around 8%. So we're back to the numbers here. And as you can see, overall, 2024 median sale price was $535,000. And so far this year, year to date, we're at $530,000. So we're down just a bit year over year. This is our days on market graph, and you can see how every spring the days on market goes down. That's how many days on market it takes before it sells. So our median days is this black line, and average days is this kind of pinkish line up here. And if we look from last spring, the lowest days on market was 44 for average, and this year it's 46 and 52 instead of 44 and 46. And the difference between average and median is average is taken in everybody, and I feel like some of the homes that are more challenging to sell are sitting even that much longer, and that's what's dragging the average days on market a little higher than the year prior. And this part here is comparing new listings to new pending sales. We're starting back in May of 23, and it shows monthly how many new listings are coming onto the market. These big dips are December. Nobody likes to list their home during Christmas time. And then the big peaks are during the spring. So you can see how this spring we're even higher than last spring. Last spring in March, we had 13 active listings. This year in March, 2129 active listings, and our highest peak so far has been in April at 2,363, and last April was 2,072. So we have more inventory on the market currently. However, we have one promising tick here in our pending sales. We're way up for the month of May. Compared to last May, we only had just under 1,500, and now we have 1,687 pending sales. So perhaps the market is getting more used to these higher interest rates and just go ahead and bite the bullet. You can see how sluggish the market has been with pending sales up until now. Here's our long look through the period of 10 years. The orange line here on the top is average sale. We can see how we peaked in 2022 with our COVID chaos and then came down in 23, and we've just been gradually, barely inching upwards over the last 2 years, whereas median is kind of staying flat, if not going down just a tick. And average, again, is taking every sale, adding them all together and dividing by the total. And then median is those ones we're just hovering right in the middle. So median kind of takes into account what's happening more often, whereas you might have a $20 million sale that really skews the average property trend line there. This graph here is total activity on the year, separated by month. So the black line is this year, last year is the green line, and then the darker blue line is 2023, and the lighter line up here where there's more activity, that was 2022. So we've been a little bit sluggish below all the years except for this April where we came just above 2023, but really we're trying to, I say, always compete with 2024 and outdo the prior year, and we are definitely sluggish on that, having much fewer sales than the year before. And the last graph I'll show you here is new under contracts by week. You can see this year in the black line, it just bops around all over the place, sometimes more, sometimes a lot less, sometimes more, and dipping down again. It's just been erratic. It's been very hard to predict this year, probably the hardest year to make predictions since I've started making predictions 15, 14, 16 years ago. So it's hard to say what is going to happen with interest rates. The Fed wants to do one thing, the president wants to do another thing, and so far the Fed is winning. They're holding out, they're holding them high. We're, like you saw before, 6.89%, and after all that increase in appreciation from 21 and 22, it's challenging for a lot of buyers to get in the market. It's also challenging for a lot of sellers to want to sell when they have 3% interest rate on their home. However, if you are a seller, you could use some creative financing and do an owner finance, and that would open up some opportunities for buyers. So think about that. If you're a seller and you have one of those 3 or 4% interest rates, you can sell your property a little bit easier if you hold that note yourself. So what are the takeaways from this? Well, it is a buyer's market. The buyers have more leverage on almost every property. We're seeing concessions go to the buyers. It's hard on the sellers. Now, if you have that perfect Pottery Barn property and you have it priced well and it's in the perfect location, it's going to sell. But if it has one little thing that the buyer can be sticky about, it just sits. I'm seeing them sit longer than we've seen in a very, very long time. And what we need to do to fix that is to have the house in pristine condition and price it properly. If you're looking to get in the market, it's a great time for buyers. And check with your mortgage lender, because a lot of them are offering a free refinance for 2 years. So say you get in at this near 7% interest rate now, but you have a free opportunity to refinance for the next 2 years. Everyone is predicting that rates will come down. Of course, they've been predicting that since November. It hasn't happened yet, but I do believe that rates will come down before the end of the year, and we'll see things closer to 6 than 7, and you can always refinance out of that. Now, you need to be able to pay for it at 7 just in case things don't move, but that's a very, very real opportunity that could come about very soon. So that's a wrap. We've had a sluggish spring, much more so than the prior few years, and what that means for summer, we don't know exactly. If interest rates stay put, I say we're going to stay very, very flat. If they go down, we could see a big pump towards the summer, towards the end of the year. If you want to know what's happening in your exact neighborhood, give me a call, shoot me a text, send me an email. I'm always here to help you make the right decision that suits you perfectly. Until next time, be kind to yourself and others. I can't wait to see you around town.